Welcome. I'm Brian Humphrey, and today we'll be discussing a crucial aspect of nonprofit leadership, understanding nonprofit financials. The goal of today's session is to provide you with clear, practical understanding of financial statements and financial management. Whether you're new to financial statements or you have some experience, the goal of today's session is to provide you with tools to analyze and manage nonprofit financials. Let's get started. Before we dive in, I'd like for you to assess your current knowledge of nonprofit financials. On a scale from 1 to 3, how confident do you feel about reading and understanding financial statements? 1, you're not confident at all. 2, you're somewhat confident. 3, you're very confident. Take some time and reflect. No matter where you are, this session will provide you clarity and practical takeaways for everyone. Before we discuss financial statements, let's start talking about governance. Strong financial governance starts with the board of directors setting up policies and procedures that dictate how the organization will function. 3 main components guide financial governance. 1, bylaws, which set the foundational guidelines of how the nonprofit operates. 2, policies and procedures, which provide the day-to-day structure of financial management. And 3, the Audit and Finance Committee, which plays a key role in understanding compliance and financial policies and best practices. If you do not have an Audit and Finance Committee, you may have an executive committee comprised of key officers of the organization. The Audit and Finance Committee is responsible for several crucial financial oversight tasks. These include reviewing managerial and accounting reports and financial documents, reporting findings to the board to ensure transparency and accountability, overseeing audits to maintain financial integrity, developing internal controls to prevent fraud and mismanagement, forecasting and budgets, and creating investment policy for financial stability. Nonprofits rely on 2 types of financial reportings. Corporate accounting, which is external reporting. This is used for external reporting to share with banks, funders, and stakeholders. It provides a broad financial picture. Managerial accounting, which is internal reporting, is used internally to assess performance, forecast budgets, analyze costs at a deeper level to help leadership make informed decisions. Both are very crucial in ensuring a nonprofit stays financially healthy and accountable. Financial statements consist of 3 primary parts. 1, the statement of financial position or balance sheet, which shows assets, liabilities, and net assets at a specific point in time. It's a snapshot. The income statement or profit and loss statement, which tracks revenue and expenses over a set period of time. And third, the statement of cash flow, which details how cash moves in and out of an organization. Each of these statements tells part of the financial story for an organization. The statement of financial position gives you a snapshot of a nonprofit's financial health. It includes assets, what the organization owns or has as economic value, liabilities, debts and obligations, net assets, the financial book or value of organization, which is what remains after liabilities are subtracted from assets. On the slide, you'll see a formula which will help you understand each of those items. The formula displays total assets at $1 million minus total liabilities at $100,000 equals net assets at $900,000. You will see that you can put this formula in reverse as a double check. This statement should always be true. The statement helps board members understand nonprofit stability and ability to meet financial obligations. The income statement tracks revenue and expenses over a period of time. It answers key questions like, are we bringing in enough revenue to cover expenses? Where is our money coming from? And where is it going? Monitoring this statement is essential for making informed decisions. On the slide, you will see key categories or a chart of accounts listed on the example slide. Revenue or donations, cost of goods sold, general expenses, which could be broken down to other chartered accounts or smaller accounts, and net income. These are key components of an income statement. The statement of cash flow shows how cash moves in and out of an organization. It's divided in 3 sections: cash from operation activities, which are everyday financial activities; cash from investment activities, such as purchasing or selling assets; and cash from financing activities like loans or grants. Understanding these reports helps leadership manage liquidity and understand how much cash is available for operations. On the screen, you'll see a basic formula of all 3 activities: operating activities plus income activities plus financing activities equals your net cash balance there. Now let's talk about internal reporting. Nonprofits need more than just external financials. They need tools to assess performance internally. Common managerial reports include forecasting financial needs and opportunities, comparing budget versus actual expenses and revenue, department and program budgets to track specific initiatives, and cost analysis to ensure funds are used effectively. By using these reports, leadership can adjust to the ever-changing environment. Let's consider a real-world scenario. Imagine you're a board member reviewing financials and you notice that you haven't received an actual versus budget income statement in over a year. The executive director mentions that more fundraising is needed to cover expenses. If you were in this situation, what questions would you ask the Audit and Finance Committee? What financial data would help you assess the organization's financial health? Taking time to think through these questions can help ensure you're actively engaged in financial oversight. Here's another common issue nonprofits face. Scenario 2, restricted versus unrestricted funds and mismanagement. The nonprofit receives a $100,000 grant restricted to specific programs. However, cash flow is tight and the organization is considering using some of the funds for general operations. What should the Finance Committee ask before making a decision? Are there any unrestricted funds available to cover operational costs? Can we renegotiate the grant and the terms to request flexibility from the funds? What internal controls are in place to ensure restricted funds are used for appropriate uses? Do we need to establish a better cash reserve strategy? Take some time. Think about those questions. Nonprofits often face financial challenges. Some common roadblocks include not forecasting financial needs, lack of governance and controls, which could include limited financial expertise on the board. Potential solutions include seeking multi-year funding commitments for financial stability, maintaining an adequate reserve to cover unanticipated expenses, hiring third-party accountants for professional oversight, recruiting board members with financial expertise to provide strong leadership, or seeking a fiscal agent to help with accounting and financial help. By being proactive, nonprofits can avoid common pitfalls and set themselves up for success. Understanding nonprofit financials is essential for ensuring transparency, accountability, and long-term sustainability. Final thoughts. Number 1, financial oversight is key. Number 2, stay engaged and keep learning. Number 3, utilize available resources. As a future board member, your role in financial oversight is critical. Thank you for your time, and I'd like to encourage you to continue to learn and ask questions as you serve on nonprofits. I appreciate you watching this video presentation. I hope this session has given you practical tools to better engage with your nonprofit organization. If you need additional resources, please reach out to Leadership Tulsa or your nonprofit organization. Best of luck to you.